So first key, things are starting to cool off. The Fed moves are having the intended impact. It seems like it hits the housing and real estate finance and mortgage markets first. But we're starting to see rates go up, home prices come down a little bit, home sales come down just moderately. But it's not getting cold, it's just not as hot. So good news is the intended effect seems to be happening. Today's big Fed day. We think we know what the decision is going to be, but we're going to be carefully monitoring the press conference after the Fed meeting to understand kind of the finer points and the footnotes of the Fed meeting to really determine what's going on. But really, we're optimistic that things will continue to be stable here in the short term. It seems like rates are not that high. If you look in comparison of back in the 90s and the 80s, there's only one or two times that rates were really higher than this in the last 10 years. Business is actually picking back up. So we saw a seasonal dip in activity for applications and rate locks and home sales around the 4th of July holiday. But just in the last several days, application volume has picked back up here. We're starting to see more inventory in some of these markets, in our centralized markets, and we're starting to see increase in rate lock activity. To me, that's a positive sign that we're doing well and our partners are doing well.
See you all next Wednesday on Mortgage Minute Live.